Frank, hold it steady. I'm going to put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Huh? Oh, yeah, sure thing. You didn't leave the keys in the spaceship, did you?
Yeah, I did. Why?
I think someone just stole it.
Oh, gosh. You know what? Whatever. That was kind of a last month thing anyways.
I think I just saw Santa walk past the window.
Frank, the food! You left the oven on!
I'll get it.
You're both here? I could have sworn I saw your ship fly by.
I don't want to talk about it.
It was Santa's sleigh. Jerome, so happy you could make it. How's your day been?
Just close the door.
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
All right. Good morning, everybody. Welcome back to another live stream. Well, good morning. Good afternoon, everybody. Welcome back to another live stream. We've got the second stream of today. We are back for of course, the Fed statement. I'm going to pull it up so we can have it in front of us. We got the Fed funds rate coming out at 2 p.m. We also have economic projections and the statement. But really where things are going to likely be interesting is an hour from now, we have the press conference. Press conference will be an opportunity for reporters to ask questions to, likely to be Jerome Powell. Let me just make sure. Yeah, it's going to be the Fed Reserve Chair. That's, of course, going to be Jerome Powell. And we're going to be getting ready for that setup together. I'm going to be taking it a little bit more chill than my usual streams because we have a long stretch here where we got some time to kill. We got some time to go through some charts, talk about setups, look at things from kind of a full picture viewpoint. Usually when I do the streams in the morning, I'm pretty fast paced. I want to get a lot of stuff done without spending, an hour and a half on a stream, which was about what we're going to do here now today. That does give us, however, the chance to go through some stuff a little bit more thoroughly. And I think we're going to be doing some polls throughout the stream. So I want to just encourage you, if you're not already in our Telegram channel, we just put out a poll. James, the poll master, I believe, did this, unless it was Chandler. It was one or the other. Let me see what we can, come on, get on the screen. Just did a poll inside of the Telegram channel. And by the way, if you're not in Telegram, we just dropped the link here in the chat. If you're watching with us live, click that link, come join. We do polls all the time on the show. So if you're a regular stream viewer, get in the Telegram, get in on the action so you can vote. When will the first rate cut be? Of course, we're not economists here. I do not try and sort of predict exactly what's going to happen when it comes to rate cuts and that sort of thing, because again, there's very intelligent economists out there trying to make those sorts of calls. For fun, I'll give you my thought process. I think we are probably going to see it either Q2 or Q3. That's pretty much the consensus right now. Some people more aggressive are leaning into March, but I'll just say Q2. Q1 is the idea that we're going to get aggressive rate cuts. And it seems like people are voting that way so far. Dang, we've already had 84 votes and this thing just went up. So people seem to be thinking that rate cuts are coming Q2 of 2024. And again, if you guys want to join the Telegram, we put analysis out here all the time. So there's charts and markups and all sorts of things. Frank and I basically are sharing our analysis in there. And like I said, it is free to join. So if you'd like to join that, we just dropped the link there for you. What are your thoughts on the NASDAQ? I'll take a look at that. We'll take a look at the NASDAQ for sure. Could it cause waves on FTSE 100? Absolutely. Because it's going to give us a general risk on or risk off bias, right? If the Fed is looking to cut rates anytime soon, it's more likely that pretty much all risk assets would see a strong move to the upside. And if they're not, the FTSE, the DAX, the Dow, probably all set to move lower. So we'll see what they have to say. Rushan Naidu, hopefully I said your name correctly. Hey, Nick, hope you're well. Brilliant session earlier. Thank you very much. I appreciate that. If you're not an economist, what role are you working in the market? It's a good question. There's a difference between a trader and an economist. And I'll give you that real quick high-level breakdown. An economist is kind of like a market analyst in the sense that they're not necessarily trying to execute trades. They're just trying to fully understand the picture. And just because you fully understand the picture does not mean you have everything on the risk management side, position, sizing, entries, exits, timing, all that sort of stuff is not necessarily indicative of an analyst, right? So an analyst or an economist may be able to thoroughly understand things or to the best of their ability, but economists are trying to make a forecast on things that are very hard to predict. Everything about markets is very hard to predict. That's why, social media's illusion of what trading is very different than actuality. It's very, very difficult to try and predict what's going to happen next. With that said, let's take a look at current things. When I say, it's difficult to predict what's coming next, I don't mean that it's hopeless to make any money trading. What I think is oftentimes the case is people think like trading success requires you to be this magical crystal ball guru at predicting what the market's going to do all the time. And in reality, I don't think you need to do that. I think you need to manage risk, take trades that have a good educated guess behind them, manage your risk accordingly, trail stops, whatever you do, stick to your strategy, and you can still do well, even if you're just following trends. In my opinion, that's how I approach it. So we'll start with the dollar index. I'm looking at the daily chart. The lower time frames are a mess right now, but the daily chart, keeping it real simple here. We're at a level of resistance, both on the horizontal level, this pink red zone, and on the downward trend line here that we have. So from a price action standpoint, I think the path of least resistance is for us to go back and retest these lows at 102.6, 102.5, 102.6, somewhere in there. So if that's going to happen, then what do we need to see from the Fed? Well, likely what we would need to see from the Fed is rate hikes are done. We would need to see or hear from them. Rate hikes are done. Progress has been made. There's risk to further rate hikes. That sort of language probably drops the dollar. If you get language from the Fed that's like, inflation is still our primary concern and we're really, unsure that we've beaten it kind of thing, dollar could go right back up. So from a price action signal standpoint, you got a couple things here. I think I'm bearish by default today and the last few days, bearish by default on the dollar index. If you get something surprising here that really changes, let's see if we can get a breakout above. If you're a bull on the dollar market, I think you got to see a break above this 104 level, and then perhaps we're trading up to the 105. I think that's the general game plan for the dollar index here. By default, I'm staying bearish. Unless something changes in the tone of the Fed that's very surprising, my default stance is going to be bearish USD. Okay. Lower rates soon in March 2024. If March is in fact when they drop the rates, then the dollar index is dropping hard. But we don't know that, right? In order for them to drop rates in March, they probably have to speak very almost dovishly today. That's my opinion. Hey, trader, take a look at the 1 hour and 4 hour time frames on XAU USD. Yeah, we'll take a look at gold in just a moment. A couple people asking about gold in the chat. What is your strategy in trading based on logic? I use a combination of both fundamental and technical analysis. I trail stops. I use market structure and price action. Okay, so gold. Yeah, let's take a look at gold. Let's see. New to the channel? Welcome. Anybody else new to the channel? Thank you for being here, by the way. If you are new, thank you for being here. We're hanging out for the Fed meeting. We will be reacting to it. Hey, I just want to say, if you're tuned in with me here, we got some time to go through markets, go through some charts, get yourself a coffee, a soda, whatever your drink of choice is, a juice, apple juice. What are you, like 6 years old? I'm just kidding. Apple juice is good. Whatever you like, get comfortable, hang out with us. We got some time to go through charts. All right. What happens if they hold rates? Dollar still drops, right? It's a good question. I don't think a lot of people are going to look at this and be like, okay, the number. The number does not matter today. I'll tell you why. It's almost a 99.9% chance that this number is coming out exactly as forecasted, 5.5%. If it's different, we got a huge day on our hands, but that's very, very, very unlikely to happen. Where things get interesting is 2:30. You get a press conference because this is forward looking. This is already pretty much completely expected. So this number probably not meaningful today. If they keep rates where they currently are, markets probably will not have a reaction to that. And if they do, it'll be a very short-lived blip one way and then reverse back. That's my opinion. Opinions as always. This whole stream is opinions. You got the disclaimers rolling across the bottom of the screen for a reason. I'm not here to tell you what to do with your account. I trade my own money. You trade yours. I'm not here to tell you what to do with it. However, if we take a look at what really is going to matter, it's going to be the statement. It's going to be projections, press conference. These things are forward-looking. These things are looking ahead into the new year. That's where things get kind of interesting. Okay, apple juice. Heck yeah. I got my coffee. There's Julie with the coffee. There we go. Apple juice is S tier. I mean, come on. Apple tier. Apple tier. You know, I like apple juice. My mom does this, and it's so good. Apple juice by itself is like really sugary tasting, in my opinion. Like it's too sweet. Let's say the appropriate ratio is 64 to 36%. Apple juice 64, water 36. Math is so hard when you're on stream, I promise. I don't know if I said that right. You get my point. It's really like, actually maybe a little bit more like 80-20. 80% apple juice and then like 20% water. It makes it so much more good, I think. Next time you have apple juice, give it a shot. Give it a shot of water, huh? Anyways, like I said, gold is our next one we'll talk about here a little bit. Gold has really been under pressure. We've broken through this level of support at 2,000. We broke this support on the upward trend. And, you know, Frank's going to join me here in a second. He gave me a good warning about this wick. He said, don't you jump in front of that wick. You know what I did? I threw myself in front of that wick and I got smacked. It was awesome. Just kidding. It wasn't awesome, but I did take a loss on this. I do have a long position on pound. It's not going well. Pound is not being my friend right now. I do have a long position on S&P 500. This one is being my friend right now. I have one friend, one enemy. Am I interested in going long gold? No. Am I interested in going short gold? No. I think fundamentally I like this thing to the upside. I do really think that rates being done and all this money that's been printed into the system and the disinflation trend, I think those things bode well for gold upside. But I need to see. We talked about this with Kenzo earlier in the show. I'm sorry, earlier in the day, really. When we did stream number 1. Kenzo and I talked about, you get down to the 4-hour, you get down to the 1-hour chart. I like the bullish picture, but I don't like the price action. Price action looks pretty rough, in my opinion. So I think, you look for these movements today. This is, in my opinion, what we look for on the gold side. No sell setups for me. Gold is not bearish, in my personal opinion. I think the move has been made. And actually, we'll bring in Frank here in just a second because I believe, I don't want to speak for Frank, so we'll bring him in a moment. But I believe Frank said that the swing, in his opinion, was too hard to the upside and perhaps is getting too far down to the downside. We'll come back to Frank. We'll talk gold in just a second. We're going to take a quick break to thank our sponsors here that make this show possible. There's 618 of you guys. Listen in on this. We do have a broker that sponsors our show here. We are very thankful to our sponsors who make this possible, but this broker will show you how you can get access to our Discord and the Edge Finder 100% for free. Check this out, and then we'll be back with Frank.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 Edge Finder 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap. And if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the Edge Finder and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
All right, guys. And again, definitely check out Eightcap. King Jad said, I am trying to find a safe broker, mainly regulated. If you're outside of the US, Eightcap is the way to go. If you're inside of the US, we got some ones linked in the description as well. We are very much in support of Eightcap because they are a well-regulated entity outside of the US. If you're somebody looking for one, you can also get our products for free when you sign up with them. So check it out. Again, link in the chat. W commercials. Thank you, Jeremy. Appreciate you. We work really hard on those. The team puts in a lot of work on that. Speaking of team, we got the team member on deck. We got Frank here. Frank, was I right about your gold idea? Is it oversold now?
Yeah, I think you said it pretty much on point.
Okay.
The run to the upside was way too hard, and then it sold in one day. Even was, what was it, like 4 or 5%? I don't know.
Mm-hmm.
Just a giant sell-off, and then it continued further down. But I am looking at longs for gold, but the problem is I saw it completing this move down towards here, which would be in like the 1950s or 1960s range, and price today is kind of unmoved overall. It's very much at break even, and it's also not suggesting anything too bullish right now, at least on the daily chart. So I'm going to probably just hold off until I see what it does after today's meeting, because if it comes all the way down here, then I'll be more confident in wanting to buy. But if it takes off right here and shows if it pairs the past day's losses or whatever, shows like a bullish hammer, I think I might look to take a long trade there. But I in terms of what's going to be said, is I don't really think anything is going to change. He's obviously going to remain cautious, and I can almost guarantee that there won't be any talks of rate cuts
Hmm.
He won't even put that on the table because the market takes certain clues in what he says and interprets it in its own way.
Right.
So I don't really know if saying, rate cuts is even a good idea right now because you don't want to drive up demand. You don't want to cause a surge of buying when it's unnecessary, and we're still focusing on keeping inflation rates low and taking them lower. So um, it'll do its thing, and if it comes down to this trend line, I'll look to buy. If it takes off, then I'll probably wait to see how it ends up on the day.
That's a good point, Frank. And again, I would generally agree with you when it comes to the press conference. Jerome Powell is probably not going to give us, rate cuts. I think what is actually what makes this meeting potentially live, or not necessarily live, but exciting, is the idea of whether or not maybe he hints at not necessarily rate cuts, but maybe if he says something like, "For now, we are done with rate hikes." If he gives us something solid in the, because there's some people, there's still an area of the market that's like, inflation is way too sticky, and he's not going to take rate hikes off the table. If you do get something where the conversation is now fully dismissive of rate hikes, that I think is probably the most possible indication that bulls would go for. They would love that, because if you rule out the idea of any further rate hikes, then the markets probably get excited about that, because there's still this argument of, where's the risk? Is the risk that we don't rate cut soon enough and we crash the economy, or which is a new and strengthening issue, or is the problem more, we still need to rate hike or keep rates very high to squash inflation? It's a kind of an interesting thing, and I guess we'll get some clarification in what he says, and with that, probably some price action that's a little bit more exciting. You mentioned, Frank, that gold really kind of boring on the day, but again, likely to spice up when we get into this. Somebody asked for US 30 in the chat. I just want to pull this up. This is the 4-hour chart. Look at how strong this chart looks. And this is also following, I believe, it looks like US 30 was the #1 most bullish asset on COT week.
It's a very aggressive change in demand too, 18%.
Yeah, it's huge. Yep. So wait, hold on. I just pulled up. So this is the 4-hour chart, guys. And what you'll notice here, 36,600. This is like a fresh, I wanted to make sure. Yeah, this is like a fresh, not all-time high, but we're getting so close. Frank, are we really just, wow, we're 1% off the all-time highs on the Dow. That is crazy. But the Dow reflects, for those of you guys who are newer to the indices side of things, the Dow reflects a lot of the biggest, most stable companies. Think Apple, Walmart, things like that. Like really, really stable, boring companies. It's a big collection of those sorts of things. And what you can see is that it seems like there was a big move into them in terms of the COT data. Now looking at the 4-hour chart, if you're a bull, these pullbacks could be interesting, but if you're a bear, you're probably looking for breakouts the other way. But I guess, Frank, this is a little bit, I don't know about you, but I'm feeling a little bit nervous with all these indices just screaming higher ahead of a Fed meeting, where we really, in order to keep this pace, to keep the S&P and all these markets so hot right now, the indices side needs to have everything perfect. They have to have inflation coming down, earnings stay in there, the consumer hang in there, end of the year rally. And what is kind of concerning is that the first half of an election year, I also looked into this, first half of the actual year of an election is seasonally pretty turbulent, because people are like, I don't know who's going to be president. I don't know what's going to do to the market. And so, I don't know. Do you think it's a little bit nerve-wracking? Are you as nervous as I am about possibly the shift into the new year?
Not really. I think this is kind of what happens towards the end of the year.
Mm-hmm.
December's not as crazy, but November's a pretty big month, and like we just saw last month was a was where we caught our big swing on the S&P. But I think going into the new year, especially January, is usually pretty good for the most part,
Hmm.
stocks wise. And I don't know the pattern of election years and how markets move during that, but I think there is room to go for the indices, and the fact that they're very close. The US 30 is very close to its January 2022 high, which
Hmm.
is just pretty monumental. It's a psychological level for sure. But the fact that we're already right there again is, I think, a good sign. So I think if we see a pullback today, probably a setup for another move higher. And I'm not really concerned about a break in structure or whatever. That can happen for sure, but it also, I don't really know if it necessarily matters because price is gonna, what it looks like is it wants to go up. So I'm pretty much on that train of bullishness for indices and bearish on a lot of the dollar, you know, uh, sentiment. I'm short UJ right now,
Hmm.
so we are.
Yeah. What are your thoughts on UJ? I know we talked about this on stream, but it seems like it's headed in the right direction so far, right?
So far, it's working out pretty well. I tried shorting somewhere around this trend line yesterday, so I'm holding it right now. Hopefully, it stays. It kind of obeys that sort of level. But I'm looking at a test down here at 141.7, which was just the low from earlier this month.
Yep.
So yeah, pretty bearish dollar.
Yeah, no, I liked your UJ sell. I said when you took the trade, I was like, oh, I like that because we've talked about this, and what I don't want to repeat ourselves too much, but the basic idea being that the Bank of Japan seems a little bit more keen on talking up the strength of the yen, but also potentially has even indicated maybe rate hikes at some point. Meanwhile, here we are. We opened the first, you know, 26 minutes of this show talking about how the narrative is shifting into rate cuts here in the U.S. And not just the U.S., ECB and Bank of Canada. So it's an interesting time, and I think that you definitely you called that one early when we talked about this on stream. Maybe a week or so back when we were talking with Ivan about it. You were like, "Yeah, this is the shift is completely flipped from what it was before." Where it was like Bank of Japan, super dovish forever, never going to raise rates, and everyone else was raising rates like it couldn't do it fast enough, and now seems to be flipping. And reminder to the audience: when a central bank is rate hiking, it is usually bullish for the currency. It slows down in some ways the economy. It's a act to move against inflation, and um, it creates and sometimes when you're rate hiking, it can create a dry up in the money supply in some ways. We saw the Fed greatly reduce its balance sheet, a lot of currency taken back out of the system. So anyways, it makes the currency suddenly more attractive, and so perhaps we're starting to see that trend unfold on the yen. Where do you think, Frank, where do you think the yen could go? The dollar yen, again, it's been trading up for a long, long time. I mean, look at this move. If you really scroll out since really 2020, all of this stuff kind of began, it's up 41%. The dollar is against the yen. It's crazy. How far do you think that this could come out if we're truly starting to see rate cuts in the US and possibly rate hikes in Japan?
Well, I mean, my first target is this sort of, I guess, support level down here. And that's kind of all I'm looking for right now. In terms of like long-term moves, it's
Yeah.
hard to say because you don't really know. But if you see that momentum or that dynamic shift where
Mhm.
the dollar is now getting weaker because the Fed is sort of ending their rate hikes, and
Yeah.
Japan is just talking about starting, and we all know that Japan will not, they're not as clear as the Fed. They'll say something and then like change their minds later on and kind of retract their statements. So I don't necessarily trust BOJ to follow through with rate hikes, but I think that inflation is going to get higher in Japan. Meanwhile, we're seeing all of the factors are pointing towards higher rates in Japan, lower rates in the US.
Yep.
That's not necessarily saying it's going to happen, but just thinking about that, it's very probable. And so at some point, I think the longer the BOJ holds out, kind of the worse it is for sort of the not just Japan, but for these pairs, because there's always this anticipation of, okay, well, if inflation is still rising, at what point are you going to start, working towards that 2% inflationary goal like the rest of the world? And that's just going to be on pretty much in the forefront of every yen trader's mind.
Yep.
And I think that if this trend continues, let's see, so this is like, I guess, 2020, this whole year, or 2023, this whole year started off pretty weak, and then just up until now has been on a tear. But we could possibly see tests at earlier levels this year. Hopefully, I mean, if the longer I can stay in a short UJ trade, the better. So,
Frank, I want to tell you something too about it. You know how I've been telling you, I talked about this earlier with Kinzo. You know how I've told you I've been buying some bond ETFs, right?
Yeah.
So this is the 2-year crossed against the dollar yen. And what I find so interesting here is they're very, very much correlated. The 2-year yield seemingly very much follows the dollar yen, which would make sense. Now, I went long a lot of these things too early, but also recently. I bought, I think I told you several months back that I began buying some corporate and treasury bonds. And I definitely was too early because they went against me for some time, but they're now kind of moving in my favor. And I actually added more recently. So by proxy, I'm kind of short dollar yen alongside, but it's more of a longer term move. And it's kind of cool to see. I mean, as we speak, dollar yen dropping. I think it has room to fall. I think you might have been on with that first time you said it back here. The dollar yen might be turning a new leaf for a while. And I guess we'll have to let time tell us, especially with the Fed meeting. But Frank, I'll let you go for a little bit. If you want to come back later and just watch the event with us, you're welcome to do so. But I'll give you a break. You can go do some other things. I know we got a lot of stuff happening in the office, so I'll leave you to it, and we'll maybe catch up with you in a bit.
Okay, sounds good.
All right, see you, Frank. Yeah, again, guys, always if you don't know who Frank is, if you're new to the show, Frank is one of our traders here at A1. Between myself, Ivan, and Frank, we are sharing all of our trades inside of our Discord community. That is a service that we offer. If that's something that you're interested in, you can join our Discord, and we do actually have a discount going on right now for the holidays. If you guys want to join the VIP Discord, it's a great day to join it. We will be trading, of course, during this event. If you'd like to come join us, get the trading signals, join our chat rooms, join the coaching webinars that we're doing, get access to all of the trades. Look at this. You got all of the FX trades, indices trades, commodity trades, stock trades for all of us. If you want to keep up to date with all of our positions, come join the Discord. It is currently super discounted if you chat with us right here. So when you click that link, I'll show you something. If you click that link, it'll take you to our support center. We have a team of people here at A1. If you click chat now and click the VIP signals or the Edge Finder, if you want the Edge Finder too, click in, message us about the discounts, and someone from our team will give you that holiday discount. It is during the stream now. Okay, so we did get a bit of volatility. If you're wondering what that volatility was, we did in fact get 5.5%. And again, we did have news come out. So dollar yen initially coming down. But again, remember, we say this every time. Unfortunately, we don't have Chris on. Chris and I always go through this stuff together. Usually the initial move is just kind of a move, but it doesn't necessarily sustain itself. Let's see if I'm wrong this time, but it's been like the last 6 months that we've been doing this. Usually the rate that comes out is very much anticipated. You get a blip, it comes back the other way. Let's see if that in fact is the case. The S&P trade's got to be looking pretty good. Yep. Up 45,000 on this one right now. Just an absolutely wild trade. I thought this thing would be over by now, to be completely honest, but I trail stops and I do not call tops on moves. So I'm just continuing to trail that entry from several weeks ago. We've been holding this thing long. The EDGEFINDER gave us the signal and boom, I joined the trade, still in it. I wish every trade looked like this. It certainly does not, but it is nice when you catch a good winner. We are still in the S&P trade. It's flying high for now. And again, we have to be careful today because, again, don't let this move fool you. I'm not necessarily saying it can't continue because, again, trend following tells you to follow trends until they end, right? We're still in the trend. But more solid moves will likely come during the press conference at 2:30. Either confirmation of this move or reversal. So we'll see. Take profit hit on US 30. Congrats. It's fantastic. Yep. Indices traders. If you're riding this thing along with me, I know a lot of members are also riding the indices. We're having a wonderful, wonderful day, week, month. It's been really, really good. And again, if you want to come trade with us, come join the Discord. That is your plug, shameless plug. I'm telling you, it is the place to be. We have been just absolutely on fire the last few months. And even my pound dollar trade's coming back from the dead. Look at this. I'm long pound dollar. Trade went against me, came back. So we're watching it. Again, come join us. Click this link. We have holiday discounts during this stream. If you shoot us a DM, we'll give you a super big discount off the Signals group. You can come join us. Euro USD just skyrocketed. Yeah, look at that. Euro dollar, pound dollar. Love to see it. Nice little moves there happening. And again, we got 25 minutes before the meeting. We're going to be taking a look at more charts. I am mostly positioned. I am long pound USD and long S&P as of November 1st. I've been in that trade for a bajillion years. I wish that I could have gotten that indices trade. I'm very jealous. Yeah, I appreciate it, Jason. Yeah, I mean, I'm going to be so honest with you. Everybody is seeing that trade, and I've gotten a lot of congratulations, and I do appreciate it. But what you didn't see is that before this trade, I took like, I can't even remember, minus $3,000 times, I want to say like 5 or 6 times that I tried to enter and got it wrong. So please understand, when I show you guys a trade like this, a monster mover, you also have to understand, I might have been down $25,000 before catching this move. I'm just trying to keep it real with you guys. When it comes to trading, you simply cannot have only the good and not the bad. Look at gold, by the way. Gold popping here. And again, we got 1,000 people in the chat right now. If you guys would smash that thumbs up button, let's get this stream on the front page of Trader YouTube. I'd very much appreciate it. I know the team behind the scenes would also as well. And Chandler or James, if you guys want to throw another poll out there, I'd love to. We had our first poll. I think it ended, or not. It didn't end, but we had our first poll. Maybe we'll do more polls. If you guys want to join the polls, join the Telegram. We'll drop the link to the Telegram. We asked, when will the first rate cut be? We had a total of 234 votes. Guys, we need more sample size. There's 1,000 of you watching, and we only had 234 votes. 236. So people are hearing my complaints, and they're saying, all right, Nick, shut up. We'll vote for it. Go ahead, whatever. But if you do want to join the Telegram, links in the chat, come join us. Gold is at 2,000 an ounce. Let's see what happens here. Again, we'll do another poll in a moment. So the editor lab, they'll put together something for us to munch on next. Gold headed to 2010. Let's take a look. Let's drop down a little bit on the 4-hour. 4-hour chart. It's certainly trying here. Let's take a look. I just want to clean up my analysis for a second. I want this to only be on the daily chart. Daily chart. Now let's go to the 4-hour. There we go. All right, we're looking at the 4-hour chart. Gold seemingly giving us a shot to the upside. Don't forget to like the stream, Jason says in all caps. Jason is screaming that. Jason is standing on his couch in his living room. Don't forget to like the stream. Thanks, Jason. And thanks to all of our friends liking the stream. So again, gold pushing here to the upside for now. And again, I think I just want to caution you. This move could be real, it could be fake, but you have to be careful because the press conference will give us a little bit more of a solid idea. However, the statement seems to be out. Let's see, is there anything that recent indicators suggest that growth of the economic activity has slowed from its strong pace in the third quarter? Job gains have moderated since earlier in the year, but remain strong, and the unemployment rate has remained low. Inflation has eased over the past year. That statement all by itself, so far, Goldilocks sounding. You don't know what I mean? Labor market hanging in there, economy hanging in there, inflation cooling. Those two combined, stocks go up. The U.S. banking system is sound and resilient. Tighter financial and credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. But see, what's interesting here is look at what they chose to put at the forefront of their post. And I don't know if this is reading too much into it, but this is from the federalreserve.gov. They pointed out economic slowdown, jobs staying cool, but tighter financial conditions for households and businesses are likely to weigh on economic activity. So what's interesting, so they pointed out that these things are likely to continue to cool inflation. And then they threw in there what they had to, in my opinion. All this is my opinion. The committee remains highly attentive to inflation risks. So think about the positioning of this article. If you're writing an article, if you're writing a statement, I feel like you want to start with your most pressing, urgent things at the front, right? So interesting. Maybe I'm just reading too much into it, but it seems like they put forward that economic slowdown and inflation cooling is kind of their base case. And that's what they see happening. And that's what everybody sees happening right now. But that's what is kind of their concern is the conditions for households and businesses. You know, that's something on their mind. And also, remains highly attentive to inflation risk. It does seem like a pretty good bullish bull case scenario. And meaningfully so in the fact that the S&P is holding those gains. So perhaps the statement did give us something to chew here. And now the question is it time for me to trail stops? It's important not to look at, let me actually practice what I preach. Your P&L does not make a difference as to whether or not I'm supposed to trail stops. My strategy does. I've trailed stops after each major breakout through structure. And now I have a little bit of a tricky part because I've entered into a trade a month ago. I'm still in it because I've trailed stops the whole way up. Now, market's popping again. I have to stay true to the trade. I need some sort of market structure to trail stop higher. I just heard that we have another poll coming out, guys. Oh, guys, we got a good one. Who did this? James, did you do this? Did James put this poll together? This is a very, very, very good poll. Chandler did this. Oh, it's because he edited the video. So he's a little bit biased. He edits my videos, so he knows what's on my mind. Chandler put out this poll. This is a good one. Two good ones. Rate cut discussions, and this one. Okay, guys, we're dropping the link. This is a good one. We need your vote on this. This is really, really important. If you are not already in the Telegram, we just dropped the link here. Get in the Telegram because we got a banger to vote on. Okay? Here it comes. Ready? Uh-oh. Hot topic. Everybody leave the table kind of situation. Like, it's like when you ask I saw a meme. It was like when like the kid gets asked by the parents, like, hey, when's the wedding? And they like stand up from the table because they're like, get out of here. Anyways, here's the poll. With the MT4 news, the MetaTrader stuff. MetaTrader, I don't know if you guys have heard this. MetaTrader's kicking off a lot of unregulated brokerages. A lot of regulated brokerages are going to keep their licenses with MetaTrader, but it seems like MetaQuotes is kicking off a lot of unregulated brokers. Hankotrade, Hugo's Way, Sway Markets, a lot of them losing MT4, and everyone loves MT4. But regulated companies or companies want to do business with regulated entities because unregulated ones can do some shady stuff. If you think prop firms are the only one that are doing shady stuff, then you may not have ever had a withdrawal being refused for no good reason from an unregulated broker. I'm telling you, that is the worst. Anyways, we need you guys' votes. We have 65 votes so far. The link to join the chat so that you can vote on these polls is here. Come join us again. Here's the thing, okay? With the news, are you going to switch brokers? I'll stick with my unregulated broker. I trade with a regulated broker. I'm not sure, but I need a new broker. You guys cast your votes. Cast your votes. Here's the answer I'm going to give. I already do trade with a regulated broker. 71% of you guys trade with regulated brokers. I'm a fan. I know I'm not the most popular for saying that. Sometimes people they get so frustrated with like regulated brokers, but you got to ask yourself, unregulated brokers, why are they offering such sweet deals, deposit bonuses, all that stuff? It's because they got to entice you somehow to get on their platform. Not all of them are bad. Not all unregulated brokers are bad. But in the event that they go under, you have no protection. So at A1 Trading, our consensus is stay with the regulated side. Speaking of regulated side, that's a wonderful segue for me to drop a shameless plug to today's sponsor, Eightcap. Chandler, do you mind dropping the Eightcap link here in the chat for YouTube viewers? In about 15 minutes, yeah. Check out Eightcap if you're somebody looking for a regular. That honestly was not conducted to be a plug, but it fits so well. If you're looking for a regulated brokerage, they support our streams. These streams are not free to run. We rely on funding and support from our sponsors. So Eightcap, shout out to them. Definitely check them out. And if you use that link, you do get access. Potentially, if you sign up for certain tiers, you get access to our stuff for free. The EDGEFINDER can be free for you if you follow those instructions linked on this page. Okay. Is Eightcap available in Africa? I believe in many countries it is. FTX was regulated. Yes, it was. But they can actually be held accountable, sued. The guy can go to jail. They can try and recover funds. Unregulated stuff, gone. It's all in Bitcoin. They'll never see it again. Zero chance. FTX, there's people holding on hope, right? There's people who, there's lawyers all over it. There's money being found, scraped back, that sort of thing. There's hope. With unregulated brokerages, again, complete. Also, the FTX regulation, if I'm not misunderstanding it, I believe it didn't have all the same stuff that a U.S. onshore brokerage had. They had stuff based in like the Bahamas. So not to say that they were totally not looked into. They were, but it's not the same as perhaps like a TD Ameritrade or Oanda, or like something that's onshore. Can you show the swap on your SPY trade? That's a good question. I'm not trading it on a FX broker, so there is no swap. I am trading shares, SPYVOO. There is no swaps. In fact, I believe in a day or two, there's an ex-dividend date where I believe the ex-dividend date is coming in, and I'll receive a dividend for holding these shares, which is kind of crazy. S&P trading 46.82. I mean, oh my goodness, this thing does not want to quit. Gold is making a nice recovery too here, guys. 2005 trading. Congrats to gold bulls. It's a nice jump from 1980 this morning up to 2005 so far. Why would someone pick unregulated then, and why do they exist? Straight up because the offers are way better. Unregulated brokerages, they allow you to deposit with Bitcoin, which is really easy. People can do shady stuff like not report their earnings to the government, which is, again, illegal. The leverage is much higher. The assets you can trade is much greater. In many ways, unregulated brokerage offerings are really, really good. The difference, though, is that your stuff is not safe and they could pull some funny business on your account, and you'll never be able to prove it because there's no third party looking over the activity. What's the reason behind gold bullish? Because of hold? I'll tell you, I think it's because, or you can get slip to HE, double hockey sticks. Yes, you can. That is why you stay away from unregulated stuff. In my opinion, don't touch it. Nick, can you show that? I just did. There's no swaps on my trade because I'm not using an FX. I'm not trading a CFD. I'm not trading a currency pair. I'm trading ETFs representing the S&P 500. Do you teach someone to use the EDGEFINDER? Yes, we've got full explanations. If you have any questions about the EDGEFINDER, if you'd like to get access to it, if you'd like to unlock the COT data, the top setups algorithm, anything from that list of things that it offers, you can message us and someone from our team would be happy to answer any of your questions, walk you through it, etc. We'll drop the link here. If you do want to get access to the EDGEFINDER, you can chat with a rep. Click that there. Dot plot moved down 75. Wow. Yeah, suddenly a surge. If you're asking why did gold get so bullish so sudden? Well, because from what we've got so far from the statement, Fed is sounding a lot less hawkish so far. A lot less hawkish means inflation's continue to come down. Disinflation's good for gold fundamentally, in my view. It makes a lot of sense that we'd be breaking out here. Question is, on the 4-hour chart, can we start to see kind of a higher low, higher high kind of sequence? Because on the 4-hour, it's been a little rough. Daily chart also kind of rough. But I think where you start to see bullishness, in my personal opinion, get above that 2,000, close above it convincingly, then maybe you start to see some of this. I don't have any gold positions open. I do have a pound dollar position open. It was very much in the red. I almost stopped out. Look at this. I almost stopped out on GBP USD. Stop loss was really close to getting hit. Price rebounded. You planning to re-enter your silver trade? No. No. Top setups algorithm does not have anything bullish on the metals for us right now. So I do not have any intentions. US 30. Pound USD was on here, but it popped off. What's going on with pound dollar? COT data. Retail sentiment's pretty 50-50. Trend. Interesting. If this stays up for a little bit, you'll probably see this thing flip back the other way. Trend may go more bullish on GU. It was bullish. That's why this was giving us a really positive score. Seemed to have flipped bearish recently after I entered the position. But I like it so far. I mean, I still think the trend is okay. All right, guys. So we're 8 minutes out from the press conference. That's where things will get interesting. We will have the live coverage on the screen. The team behind us will get that set up for us, which would be awesome. How do you deal with the emotional roller coasters of holding a profitable trade like yours? Marcel, honestly, I like to make the joke that a lot of crying really helps getting through trading, but it's not even a joke. No, I mean, I've done this for a long time, and I've I think I've developed more patience over time, but it's still hard. I'm not going to say like, oh, there's been many times where I've been like, oh man, I just need to close out this trade. The psychological, chalk it up kind of feeling is strong, but I don't take profits just because the market's moving in my favor. I take profits when the market tells me it's done. And for me right now, the way I've measured that, I've put my stop behind this market structure. This broke out, hasn't come back. So yeah. Would a swing trade on NASDAQ be smart? I mean, in my opinion, again, I think it's rough to try and chase up here. If you caught the move, congrats. If you missed it, don't let FOMO make you do a stupid thing, right? The move is fantastic, but if you missed it, it's okay. There's more moves in the future. I've missed so many things. I've been so, on the sidelines with many things this year. I had a conversation with Ivan. I've been really, really wrong about gold recently. When it was rallying here, I thought it would go down. I missed the move. And then when it pulled back off this high, I thought it would keep going. I got stopped out. So again, understand we're all human. We all make mistakes, but don't let FOMO be one of them. Because we're about to have a Fed statement. It's likely to get very much some volatility going. Could come all the way back. Could keep going a lot more. But do you really want to just gamble on that? I think that's not worth doing. Would you take another entry on S&P? I'm done. I've taken 2 trades. I entered into it initially over here. Right? There's the S&P trade initially. And then I added to the trade over here. I picked up VOO. Both of these are the S&P 500, just 2 different ETFs that track them. I did this so that I could see where I added the trade a little easier. So I added to the trade over here on this pullback. And I've just been holding it the whole time. Yields dropped, guys. My goodness. That's why forecasts for a sooner rate cut just spiked. Wow. What a monster move. The YouTubers all gone since they can't fake stuff on MT4. I'm saying. How do you know if a broker is regulated? You should be able to Google it and find out. They should also have it on their site. And if you speak with a representative, they should be able to give you that information. But I can tell you, as a U.S. trader, here's a tip for U.S. traders. You should not be able to trade NAS 100, US 30, XAU, USD. You can't trade those things on a regulated platform. If you're trading them, you're trading on an unregulated and, in my opinion, unsafe brokerage. If you want to trade those things, this is how I do it. I trade on Webull. Again, there's a referral link in the description. And if you use that, you get a free, I think you get several free shares. Depends the offer. They always have new offers going up. If you are in the US and you'd like to trade the S&P 500 or gold, this is how I do it. Okay. We got the link here. Thanks, Chandler, for dropping that. If you want to use it, it's a referral link for Webull. You don't have to use my link if you don't want to, but if you do, I'd appreciate it. You'd be supporting the channel. Webull is regulated. I trade ETFs. I don't trade CFDs. We can't do that in the US. That's not available to us. And if you're doing it on a brokerage, that brokerage is not regulated enough to trade to protect US clients. Trust me, I did this years ago. I was in the same boat. I was like, I want to trade XAU USD and US 30 and all those things. And then I realized, oh, you cannot do that as a US client on a regulated brokerage. And I, in my opinion, I could rant on that all day. I put out a video about it today. I have Oanda. Nice. So yeah, so let's see what else we have to talk about. We've got the news coming in pretty soon. Silver's rallying, gold is rallying. US 30 still bullish overall. There it is. Look, trend just flipped back in. Nice. We thought about that and that came into play. Nice to see you pound USD. That gives me a little bit more confirmation. I am long pound dollar. Pound dollar's top setups. Beautiful. Look at that. Look at that. Pound USD. I took it off the daily. Stops below that. Well, actually, this is kind of cool. My stop was below this, and it did end up holding really well. I didn't get stopped out, though it's a little bit close for comfort. It would have been fine if I got stopped out, but it was really close. I was pretty early on this entry. Yep. So watching that one again. We'll have the meeting pulled up for you guys on the stream. We'll be watching that together. We may or may not have Frank come back and watch it with us. We'll see. But we're going to hang out and watch that. Just a heads up before that does start. If you guys want a copy of the Edge Finder or access to our signals, we are currently doing our holiday special discount. We'll drop the link in the chat if you do want to take advantage. Again, if you want to join the signals group, just a heads up, our signals group, it is real trading, real live capital, no nonsense, no fake stuff. I say this each time because I think it's worth mentioning. A lot of signals groups do not actually trade the signals they share. When you see a trade being shared with full breakdowns, explanations inside of the Discord, just a heads up, these are real trades on our real capital. So if you want to get access to the signals, come join the group. We'll give you a holiday discount if you send us a direct message while we're live streaming. Click this link. You can chat with us, get your access set up. I got team members sending me a message. So let me just make sure. Poll is out. Thank you, James. Okay. Oh, Frank pointed out something for us. Hold on. Oh, Frank sent us a little mail. Let's take a look at what Frank has for us. Fed officials see lower inflation, slower GDP growth in 2024. Fed officials see 0.75% rate cuts in 2024. Wow. Fed officials see additional rate cuts in 2025, 2026. Mr. JP's coming out, guys. We're going to watch the stream here. Take it over.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and
Pretty dang bullish, Frank.
developments.
Yeah,
We remain
that
committed
rate
to bringing
cut
inflation
talk
back
was,
down to our 2% goal.
I don't
and
know.
keeping longer-term
That came out of nowhere.
inflation expectations.
Did
well
he say
under.
anything? I didn't hear all
Restoring
of what
price
he said.
stability is essential
Is he
to
talking
set the
about rate
stage
cuts or
for
just
achieving
inflation?
maximum employment and stable prices
What you sent
over the
me
longer run.
was pretty
To conclude, we understand that our actions
pretty
affect
much
communities, families, and
seems to
businesses
be
across
moving
the
it.
country. Everything we do is in service to our
the
public
tweet,
mission.
the
We at the
x.com.
Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
I have a few questions, Jerome.
Yep, I got one right here.
Thank you. Chris Rugaber at Associated Press.
We're
I
talking about
wanted to
climate
ask,
change.
how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle.
I like you guys'
additional
comments.
hikes that we believe are likely. So that's what we wrote down. But participants also didn't want to take
4,700 on
further hikes
SPX
off the table.
500.
So that's really what
Crazy.
we were thinking.
Yeah, this looks really good.
The microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr.
I
Chairman.
love this guy, by the way. I listen to him all the
Governor
time.
Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer.
That's way better than
there's a
last time.
Naturally,
Mhm.
it begins to be
He
the
said-
next question, which
He
is
said we're not thinking
when it
about
becomes
cutting.
appropriate to
we'll
begin
leave
dialing back the amount
hiking
of policy
possibility
restraint
on
that's
the
in
table.
place.
Now
So
he's
that's
saying
really the next
we're
question.
looking
and
to cut
that's what people are thinking about
at some point next
talking
year.
about. And I would just say this:
but we're not
we
we're
are
not looking
seeing
at hiking as a
strong growth that
as a big,
appears to be moderating. We're
factor
seeing a
anymore.
labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not.
Crazy.
That's really the question that we're on. But of course, the other question, the question of when will it become
Old
appropriate to
2015.
begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion now in the world, and also a discussion for us at our meeting today.
Nature of that discussion today. Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast. So many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement. Like, this is what I wrote down, this is what I think, that kind of thing, and preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Rachel? Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I
Hit her
think
again.
There's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt since the beginning that there was a possibility, because of the unusual situation, that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
I'm curious, if you're looking back on the past year, you talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant.
Frank, I'm muting him. You guys can still read his commentary below, but I just wanted to say we were wrong about thinking he wasn't going to talk about rate cuts. And that's why the market's moving so high. I think you and I were not expecting rate cuts to be mentioned. I don't think anybody was, really. And here he is pricing in 3 rate cuts next year. That's just crazy.
Yeah, I think if you rewinded this stream like 30 or 40 minutes, I said it's almost guaranteed he won't talk about rate cuts.
Yep, that's what I thought too.
That was
I was agreeing
extremely,
with you for sure.
that was very wrong. It's very wrong of me to say that.
Well, I think you were right in terms of in line with what was expected. We just both were. I mean, the whole market is surprised. That's why we've got, the S&P 500 now at this point up over 1% on the day after being up 1% on the day like for the last month. So, yeah, it was a surprise, but a good surprise, I guess, if you're an indices bull, gold bull, all those sort of things. We're seeing good moves here.
Yeah, I agree.
PC inflation, core inflation and the federal funds rate stays constant over the year, are you simply calibrating against the fall in prices, in the price level that you're expecting, the rate of inflation that you're expecting, as opposed to supporting the economy?
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy. And I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down they basically, each individual writes down a forecast and a rate forecast that goes with that forecast. We tabulate them and publish it. And so it isn't, you ask about real rates, I take it, that is something that we're very conscious of and aware of and monitor. And it's certainly a big part of, it's a part of how we think about things, but really it's broader financial conditions that matter. And as you well know, it's so hard to know exactly, what the real rate is or exactly how tight policy is at any given time. So you couldn't follow that like it was a rule and think that you would get the right answer all the time. But it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
It sounds like the discussion over, if I could follow up, has already kind of begun. I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over that assessment, really, over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not.
Frank, your UJ trade looks great.
It feels great too.
And you're long are you on Bitcoin?
I have Bitcoin, but not a lot.
Okay.
But I've been trading it a lot on this second on this FTMO challenge account. So it's not really making me any money, but hopefully it'll help me pass.
That like I said, that UJ move is just beautiful drop there. I'm looking at it. We'll keep a tab. I just want to show this real quick. We'll come right back to the JP. Look at that drop. Just gorgeous. Silver flying, gold flying, indices running, dollar index dropping like we talked about. So it's nice to see. And again, we definitely got what the doctor ordered from Jerome Powell. We got more than what we asked for in terms of, this dollar bearish thesis we've had. We got more than we could have hoped for with the rate cut topics coming hard into the narrative. And I think, it makes sense from a perspective of, if you think there's going to be cuts in March, I didn't think there was going to be cuts in March, but suddenly with them talking about it so soon, might be cuts in March. And so that's what I think the market is thinking about today.
Wait, did they say March?
No, but projections like the Fed watch tool, a lot of people, for a little while there was this March prediction and then it got pushed out to June. I bet you today it's coming back a lot sooner. So we'd have to check the Fed tool, but people are casting their bets. But when you have yields dropping 4.5% on the day for the 10-year and 6.25% on the 2-year, that's a dramatic shift in expectations for Fed monetary policy. I mean, that just evaporated all of the bounce back that we've had. I mean, just in a single candle here on the daily chart, just wild.
The last time it was mentioned, I saw Q3 of 2024. So I know he's talking about it now, but
Mm-hmm.
does that necessarily mean a cut will come early next year? Or
I
is he
think,
just saying, maybe in the latter part of 2024 is when you'll see cuts?
so I think what we're talking about here is we have from the Fed, they're talking about 3 cuts and they're being conservative. The market is front running that further, saying that there's possibly cuts even sooner than what they're saying. So we've kind of seen this. They're always, well, not always, but oftentimes they're more cautious than the market thinks they can be. And so there's that kind of concept of possible rate cuts sooner. But again, we'll have to see. But this was the idea for March that was kind of in people's mind for rate cuts was contingent upon exactly what we saw today. Rate cuts actually being talked about prior to the new year. I did not think it was going to happen. Frank, I know you didn't think, neither of us thought that was going to come out of Jerome Powell today. And here it is. And that's the reaction. S&P up, gold up, dollar dropping like a rock. And noticeably, for indices, true traders, you understand. Look at the Russell. Russell, very, very swayed by interest rates, flying high here today.
I was
Yep.
literally just checking what the small caps were doing.
Yep, flying high.
So
We've also got
we got small caps up. SLY which is the same thing as Russell, is up 2.5%.
Yep.
We got S&P, which I think is up 1%, 1.12%.
Yep.
And the bullish case for Bitcoin is, it seems like today it's a triple leveraged S&P index.
yeah.
It's up 3%. So that's why I have been bullish Bitcoin, is because when you talk about an easing Fed, which is exactly what's happening now, you get basically the same move from the S&P, but just with more leverage, just a heavier move to the upside.
Very, very interesting. Frank, I got to hop off because I got to go do this podcast and talk all about this. But we have 1,000 people watching. If you guys are not inside of our Telegram, come join the Telegram. We will be keeping you guys up to date with our analysis. Frank and I both post throughout the week charts and setups and things like that. If you'd like to stick in there, here it is. It's right there. We'll be keeping you covered there. Also, you can join our VIP service if you're interested in that. If you want more information, then click the link in the chat. You can direct message us for access. We're doing a holiday sale while we're streaming here. If you want access to our signals, if you want access to the EDGEFINDER, we'll hook you up for a super discounted rate. Click it before the stream ends. Click that link. It's in the chat there. You can have a direct message conversation and get set up with access to our software, to our signals, whatever you like. Just let us know and we'll hook you up. Frank, thanks for joining me. And everybody, thanks for hanging out. We'll see you guys on the next stream. We can call it there. See you, everybody.
Fun. Thanks.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.